Welcome in everybody, and I already like all the comments in the crowd. Brian, Deanna, Kelly, Emma, Autumn, Janet, Leon, Mr. Simons keeps coming in. Like, love a good crowd, always fun. Tom, so nice to be here with you as always. So I've been making, you'll be proud of me. I think I've been making less trades lately. I had like a kind of like a moment where I decided that rather than three scenarios for my own mindset, which is up, down, sideways, that I'm only going to be focused on up and sideways. And if I miss a down move, then me winning on a down move would be not losing instead of bearish, because trying to time the down moves for me has proven to be a humbling journey.
For anybody, for that matter, for the last since 2009, I would say that's a pretty fair statement.
And inevitably, whenever I make that proclamation, because I usually do it once a year, I give up. The market goes down for the next couple of days. So like the last thing I did 2 weeks ago, I was like on a Friday, I'm like, I'm gonna get it all out of my system now. Like I'm gonna just trade. I'm gonna like bid. Like one time, I wanted to stop drinking Diet Coke, and I had one of my students was a hypnotist, and I was like, "You think you could hypnotize me?" And she's like, "What would you want to be hypnotized?" I'm like, "I'd like to stop drinking Diet Coke." And she like did this series of questions. We had 2 phone calls. I don't even remember what it was, but it wasn't like I was like in a trance. She just asked me a lot of questions and had me answer them. And I ended up binging on Diet Coke. Like I drank 2-liter bottles, and then I didn't have it for a year. And I felt like the same thing coming on with the trading. I went on Friday and I allowed all my worst impulses to say, I'm like, I'm shorting everything. I was buying puts in SoFi. I was MSTR post earnings as much as I could handle, stomaching the swings. I was like letting it all out of my system. And the last thing that happened was MSTR ran 6 points in the last 3 minutes. And I said, this is my last day. And since then, it's gone down 45 points. so I am.
It's been a nice little. I mean, we could talk about MSTR later because I have been bearish in that stock for months, and finally it's gone for basically the last 3 months. It's gone straight down. But I've been bearish in that stock for probably a year before that. Only because you've heard my story before. I consider Michael Saylor and this whole thing to be an absolute scam. Yeah. And it wouldn't surprise me if this takes down, the market, let alone Bitcoin. But when they are forced to unwind, when MSTR, when their cash Bitcoin is trading under their book value, which is inevitably going to happen, I have no idea how they're going to support that stock.
By the way, it's funny when I have talks with you and realize that it's actually your ideas that I thought were my own that I know I got from you. Like I remember we put titles out knocking MSTR that it was like a Ponzi.
Yeah. I mean, MSTR is almost cut in half when we did that show,
Yeah. And so I've come up with a theory that I thought was my own, but it's not. It's yours, which was that the downfall of this market could be, well, not downfall, but like I think one of the biggest dangers to this market would be a Bitcoin sell-off that kind of takes a lot of things down with it. Versus typically Bitcoins followed the market. And I think you could see a reverse where if they kind of came unwound, the connection, and Bitcoin started going down, it could pull the market down if it got to a certain point.
It would be, I'm not exactly sure what would cause digital assets to implode. I mean, I do understand that everybody's long digital assets, and I do understand too that if the market was to sell off significantly, people would sell digital assets because they're not leveraged, so they're all cash. So basically, you can meet other cash needs by selling crypto, because literally nobody is short any crypto. So I don't see what be, what would pressure crypto into going sharply lower other than a sell-off in a broad-based, asset sell-off. And I'm not sure, I'm short across the board. So I think we're going lower for a trade, maybe 5 to 10%. I thought we were heading there last Friday, like you said, but it didn't, we turned around and they've rallied since. Now they're one tick away from all-time highs. But I do think there is, I do think that the velocity of down moves to me is still really scary. But there's, like you said, there's no reason, like even on a day like today when it feels like virtually every NASDAQ stock was kind of blown up a little bit. They couldn't even get the NASDAQ closing unchanged on the day, and the Dow's up huge and the S&Ps are up. Small, but they're up. They couldn't even sell them off today.
Well, I would like to see a report almost. Did you see the new show on Netflix, like A Room Full of Dynamite?
No, I don't watch TV. Sorry, I'm a bad person to talk about Netflix shows. I don't have Netflix.
So, wow, that's crazy.
I know. I shock people when I say that, but I don't have any. I don't even watch TV other than sports.
So that's something. But you know what? Maybe that's why you could process so many other things. So Room Full of Dynamite was really well done. It was she's an Academy Award winning director, but it was like it was kind of like a scenario where there was a nuclear missile headed towards us, played out from all these different perspectives. They didn't know where it came from, and like they're trying to decide how to react. And so everything's like imminent decision making. That's why I thought you would like it, because it's like all like high stakes in short period of time.
Yeah, I like that kind of stuff usually.
And it kind of ends with like you don't know what happens. Like it's 3 seconds till impact, and you don't know what's going to happen, and that's how it ends. And it's not to be continued. It was just more of a. Anyhow, I almost want to see that for Bitcoin, because here's how I think it would go down. Just speculating would be, there's so many copycat companies to what MSTR did. So many that are doing Bitcoin plays. And if they start to get behind and then they start to go under, and then there's forced selling of Bitcoin with no one there to support it, that's how I would see it go down, with all these copycat companies that don't have the head start that MSTR had. But I don't know. Yeah, sorry for ruining the movie, Ron. Also, Tom, by the way, the most comments we've had so far is about your lack of hat.
Lack of beret. I know.
Yes.
I'm going beretless now. It's time, because too many people thought I was bald. Too many people thought, like I was whatever. I don't know. So I went and changed up a little bit for now. There's something called a DATCO. I'm not sure if you're familiar with the term. DATCO.
Okay.
It's an acronym for Digital Asset Treasury Company. Okay, Digital Asset Treasury Company. And it's essentially the kind of company that you just talked about. That's how you set up an entity. It's called a DATCO, where essentially your core business is holding digital assets. To me, the rise of the quote DATCO is going to be very similar to the rise of the SPACs. I'm just echoing what you said. Yeah. And I do believe that there is going to be a day of reckoning for that approach to trading, crypto assets. The other side of the coin is that most people that trade crypto are pretty smart about it. They have a very small percent of their portfolio. It's cash crypto. It's non-levered. So there's no real, there's no real reason to sell. And most people that are long crypto didn't buy it up here. So I don't think they feel like they have a crazy amount of risk, that kind of thing, because they know their cost basis is really low. So I don't see crypto crashing, but if it was to enter into a panic stage, it would be because the Michael Saylors of the world, the Ryan Cohns of the world, these guys are grifters. They're They are literally snake oil salesmen, and their day is coming.
So Ram wrote option talk, and yeah, usually we dive into the options. So I'm not trying to make this like a Bitcoin conversation.
Oh, no. I mean, I just, you brought it up. I just wanted
no,
to.
I wasn't saying that to you. Sorry, I was answering the audience.
Okay.
Because I was steering it towards Bitcoin, but I was going to explain why. Number one, I don't love the market here. So
Yeah, I agree.
Ram, like for me, I haven't been looking for a lot of bullish trades, and I'm trying not to make bearish trades. So I'm kind of like just evaluating everything. And then my mind starts to wander, like what could trigger a move? And so the first thing I've been talking about is Bitcoin is a market catalyst, which would lead to trading. So like my approach to trading is always to start at like what's going on in the world and then work my way down to opinions on trades.
Sure.
And I'm kind of stuck on what's going on in the world. So I haven't been able to work my way down. That's for Ram. But I also, a buddy of mine, he works for company. His job, Tom, is he comes up with option strategies, and people pay for them. And if they use his strategies, they execute through his clearing firm. So that's his business is like he'll do complex or whatever, not complex, just really thorough options trades, and he sends them out to hedge funds. And if they like his ideas, they give him the order flow, and they make good commissions on that. And that's like a business. And he was just interviewed, did a whole thing about how gold has become more of like a meme play than an actual commodity play. So as we're working our way away from Bitcoin, I would like to stop on gold before we get into the options. What have you seen in gold? What are you doing in gold? Because that also is kind of off the rails.
Yeah. So it's funny that you mentioned it, because you and I rarely talk about precious metals.
Right.
Because you and I don't talk about commodities that much, and gold is clearly, the shiniest of them. But I did trade today a lot of silver and some gold, so I was definitely in that marketplace. I shorted silver a little too early. I don't know if you looked at silver at all, but silver has been hyperbolic the last couple of days. It was up $2.50 today, which is like 5%. Okay, so which is a monster move in silver. Up 260 is one of the largest moves you're ever going to see on a daily basis, except for, there's been bigger ones, obviously, but silver had a monster move. Gold was up $90 today. I traded gold as well. I'm a little bit short gold. I'm decent short silver, but I'm also, I know it's going to sound like it's a little bit kind of hypocritical, or maybe not hypocritical is not really the word, but a little confusing, because I'm also bought the gold silver ratio today, which means I bought gold and sold silver on a delta neutral, like volatility adjusted ratio. If you're doing it, you can't really do the gold silver ratio using SLV and GLD because it's too capital intensive. But if you can trade futures, you can use the micro products, which is MGC and SIL, and it's 2 gold to 1 silver. And you can use the big contracts too, but the big contracts are monsters. Like a 1 contract move today in silver was $26,000. A 1 contract move today in gold was $9,000. Those are huge moves. But the micro is 1/10 the size. So we were buying 2 gold, selling 1 silver, and also just shorting silver outright today.
And that's because of also the fact that it's kind of like diverged from what it's normally intended to do.
Well, I don't know how long you've been watching gold and silver, but gold had an absolute insane move about a month ago, and it ran up to, almost 4,500. And then when it got up to 4,500, it had a really quick pullback and pulled back into the 3,900 handle. Like it went hyperbolic, and then it just kind of had a couple of huge down days, like $100, $200 a day, and it just had some monster moves to the downside. And gold dropped almost $500, which is, let's call it 12%-ish, which is a decent sized sell-off. And when gold dropped 12%, I thought the stock market would follow and have a decent sized sell-off as well, but it didn't happen. Silver also dropped about, I think about 12 to 14% off its highs, but silver's had a really strong rally back. The gold silver ratio, which means how many contracts of silver can you buy? Meaning, I'm sorry, how many contracts of silver can you buy with the amount of one, bar of gold? How many bars of silver fit into one bar of gold is the simplest way. And the answer is right now it is 79.333. And recently it's been as high as 103. So silver is very expensive relative to gold. That's a trade that we like.
Quentin said the symbols. Can you guys all see that the micro futures in silver and gold would be /SIL and /MGG? Now, if people don't trade, how many people on here trade futures? Give me a yes or no. Just try to get it.
Well, if you don't trade futures, Adam, you can trade SLV, which is the silver ETF. It is the silver ETF, by the way, is a pure play. It's not like you're not buying a bunch of silver stocks. It's pure silver. And if you do the GLD, which is pure gold, these are ETFs which just buy and sell the futures contract for you. The problem is they're very capital intensive because they don't, but they have decent option market and they're very liquid and blah, 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 and all that kind of stuff. But if you want to trade the stocks, it's SLV, which is silver, and GLD, which is gold. If you want something that's more capital efficient, those would be the micro futures.
Right. So a couple of no's, but before that, a lot of yeses. Kent, Jeremy, PJ, Deanna, and Suzanne, and Zahor.
Remember, there's absolutely, just so everybody that's listening is clear of the concept, there is no difference between a micro gold contract and 100 shares of GLD. They are virtually the exact same thing. I mean, they're going to move together. They look alike. They walk alike. At times they even talk alike. They are the same damn product. So if you want to buy 100 shares of GLD, go for it. If you want to do a micro gold contract, go for it. One lot. They're the exact same thing, except the gold contract requires, 1/15 as much capital.
So what about options? What about options on SLV?
They're not the greatest. Today they were good, but normally they're not the greatest on SLV. They're better in GLD. But if you really want to trade gold options, I would trade the /GC gold futures options. Now they're a little bit bigger in size, but it's a more liquid marketplace. /GC is a very liquid marketplace. And on Tasty, all the functionality is the exact same, whether you trade futures options or listed options. But you can trade GLD. The one thing you're going to see when you trade gold and silver is that they have a ton of call skew. So what that means is that call spreads above the market, like if you want to get short, selling a call spreads, you're only going to collect a small amount of money because there's giant call skew in there. And on the put side, you can get a lot of money for selling put spreads. You get a little money for selling call spreads, but put spreads are expensive. Short call spreads are cheap.
And we've learned from the past that
doesn't mean anything.
Call spread doesn't mean that it's going up. Correct. So I'm just going to read out. We have a bunch of questions, so I'm just going to try to fire off. And
I'll fire off answers really fast. Go ahead.
Related as possible. This is from Emma B. Is it unreasonable, Tom? Is it unreasonable to expect at least 15% personal account return from options alone?
No, that is very reasonable. That is 4 times risk-free rates. The low end of your objective should be in that 15 to 18% range annually, which is 1.5% a month, which is 4 times risk-free rates, which is absolutely reasonable to have as an objective because you're taking a lot of risk and you're working hard at it and you deserve to be paid. If risk-free rates are 4%, 15, 16, 18%, which is 1.5% a month, is totally reasonable.
Jeremy says, if we are a little bearish or thinking market correction, what are some positions to explore, like this gold-silver ratio maybe? What's like another?
Okay, well, the gold-silver ratio is not correlated, Jeremy, to the S&Ps. So that would not be the play. The gold-silver ratio or shorting gold or shorting silver would be something that you would want to do if you are bearish on precious metals or if you are a pure outright contrarian, you don't care what the underlying is. But if you're bearish on the stock market, listed stock market, the S&Ps, that is not the way to play it. There's zero correlation between gold, silver, and the S&Ps. So if you wanted to get short a little bit of the market, given that we're just off record highs, personally, I would probably sell a call spread, but you can also, buy a put spread. I mean, you probably don't want to get naked short up here just because, we haven't, like Adam said, we haven't turned around. Shorts haven't been paid at all. But looking at looking at where everything's trading right now, I would either sell a call spread in the SPY or the QQQ, or I would buy a put spread in either one of those two indexes as well.
Well, let's just to follow up on that. What do you think is the most challenging? Do you think one's harder than the other?
No. I think it comes down to probabilities. If you want higher probability of success and you want to make potentially less money, you sell a call spread. Because if you sell the call spread at 30 or 35 deltas, you're going to have, a 70+% chance of making money. If you buy a put spread at the money, you're going to have a 50-50 shot, but you're going to make more money if you're right. So it's really just a question. There's no theoretical advantage. Selling the out-of-the-money call spread has a higher probability of success. Buying the at-the-money put spread has a greater profit potential, but it's risk one to make one.
I'm thinking more in terms of the indexes. Like the Russell is clearly weaker than the Qs, so why not target the Russell? Or is the Russell still lagging behind, so there's more upside to the downside if you target the Qs? Like which index?
Well, it really depends on your views on velocity. So if you're comfortable with like a little bit of a slower moving vehicle, then sure, the Russell, if you had to pick, the Russell would be the weakest right now. The NASDAQ would probably be the strongest, although the Dow's been strong the last couple of days because of IBM. I would say the Russell has been the weakest index. The NASDAQ's been the strongest, followed by the Dow and then the S&Ps. That said, if you want the most bang for your buck, you're going to short the NASDAQ. If you want kind of the slowest moving vehicle, at least to this point, you're going to trade IWM or the RUT.
I wish I could turn in my homework to you. I don't even know if I would. I might be embarrassed. But if you look at all my my individual positions, like made and lost, my best trades for the year are always individual plays, usually something I owned options on that I was long and made a lot of money.
Sure.
My worst performing vehicle is the Qs. I'm down more money in the Qs puts than any other position. And the worst and scariest part of that is I feel like I make money in them. So when I look and I see that, I'm like, what? Because I remember the wins, but not the losses. I don't know. I find the Qs to be exhausting trying to trade puts on the Qs.
It's funny. For 2025 so far, my best performing assets, my best performing asset for the year is bonds, which I can't believe. And my worst performing asset is a few tech stocks like AVGO and Roblox. Two stocks that went absolutely parabolic on me. And I think, and the other one would be Oracle because I got caught in the Oracle earnings. So my three worst plays of the year are tech stocks, and my best plays of the year are commodities. So it's just kind of it's a little bit of a weird year for me. Yeah.
Zahor says, PJ said, plus cycle work and seasonality shown by Larry Williams show both will be backing up into 2026.
Is he out of jail?
Is he in jail?
I'm just kidding.
I
don't know. If anybody ever quotes Larry Williams to me, that's what I say. I don't
know who he is.
Larry Williams?
Yeah.
He's like he's a technician from the way back in the day. I think he got in trouble once for something. I don't really remember the whole story, but I don't know. I don't know. I think I met him once. I don't really know him. He's a old school technician, I don't really care.
I'm looking out. So Zahor said, I think Tom's bread and butter is sell 90 days 25 delta versus long 10 delta call spreads, then close them in 30 days, if I recall from his videos.
No, I don't go out 90 days. The longest I'll go out is 45 or 50 days. I never go longer than 45 or 50 days.
Quentin's here from Tasty Trade. If you're looking to learn more about future trading, check out our courses on futures and future option at courses.tastytrade.com. Mary said, can Tom structure this gold silver trade with GLD and SLV options?
The answer, Mary, is that you can, but it's a very inefficient way to do it. I hate to say that, but the beauty of, and this is something I'm not sure that we're ready for this on today's chat, but what Adam and I were talking about when you talk about gold and silver, it's called a basis trade. And what that means is you're really not trading gold or silver. You're trading the spread between gold and silver. That's all it is. So you're trading actually the spread between the two rather than the two themselves. And what that comes out to over time is it's a trade that reduces the risk in gold and silver if they were individual trades by about 85%. But it also means that it's not a trade designed necessarily for options. Now, if you wanted to, you could sell a call spread in SLV and you could sell a put spread in GLD. But again, they don't necessarily work perfect using spreads. But anyway, that's how I would do it. If I had to do it with options, I wanted to be the most capital efficient, I would sell an out of the money call spread for about 1/3 the width of the strikes in SLV, and I would sell an out of the money put spread for about 1/3 the width of strikes in GLD. Now the problem with that is if they both go down huge, you lose money because the GLD put spread goes to a bigger number than than you make on the SLV call spreads. But that's how you would do it.
So you want to be right, but not really right.
No, you want to use the micro futures as basically, or the mini futures or the micro futures. That's just for that kind of a trade, because a pairs trade is an underlying trade. It's not a time sensitive trade. Like you're not doing it to collect time premium.
Snow said if Tom could only do one trade, this is kind of like a reminiscence of a stock operator when he buys the railroad. If Tom could only do one trade, what trade would he do? And by the way, whenever I ask that question, I just add, if you can only do one trade and you have to be right, what would you do? I like to add in the not like risk reward, like the.
Hold on, are you talking about one strategy or we'll pick one underlying?
Snow, let us know if you're talking about a strategy or an underlying, and I'll come back on that and we'll ask a couple more questions in the meantime. But Snow, right back and answer whether you meant only one strategy or one stock, because that's very relevant. Benny said, same with me. I'm taking losses every day now, and the QQ put 0 DTE. Yeah, Benny, it's honestly like a drug, and we just have to stop. And I'm actually thinking about starting like an AA for people who buy puts on the Qs, where we go to meetings and we remind ourselves to stay vigilant and not do it anymore. Rick said SPY closed the gap today. Closing today at 683. Does that have any significance or meaning to you? No.
I mean, he said the S&Ps, just so I heard you right.
Rick said SPY closed the gap today from November 3rd, 683.34 close to closing today at 683.38. Does that have any significance or meaning to you? That it filled the gap?
I'm not a technician, so it doesn't. But if it does to you, I mean, I'm all for using that as an engagement tool. I did think this morning when the S&Ps traded up to 6,900, I did think I don't think in terms of closing gap because my mind doesn't work that way, but I do think in terms of like, an interesting double top and that kind of thing. And so that's how my mind was working all day, but nothing really happened all day today. And I have to tell you something. I have been up since Well, I live in Chicago, but I've been up since 3:30 this morning because I did a hit on CNBC at 4:30 this morning, which they said, "Can you do a 4:30 in the morning hit?" And I go, "I'll do it for you." And so I've been up since 4:30, and after I finished that little piece on CNBC, I went and I traded for the next 2 hours like a true junkie from 5 to 7 in the morning, and that's when the S&Ps were kind of, I wouldn't say they're pretty much on their high. The Nasdaq was definitely on its high. It traded up to 25,000. It traded over 25,800, and so I think that it was a really interesting morning, and I kind of agree with him that I mean, he says close the gap, I say double, whatever, but it felt to me toppy. That's all.
I have more questions that I'm going to keep going with in a second. We also had a lot of Larry Williams commentary. Apparently, he ran for the U.S. Senate.
Don't help me on that. I don't really care about him. I don't know him. I don't give a crap. I've never been a fan, but I don't give a crap.
Larry's here and he wants to come on. No, I'm just kidding. So Tom, I find this just for you to comment. I think this would be interesting. I think you'll like this. So I went. My dad gets treated at Duke University. Their hospital has great resources.
Okay.
And so we fly down like kind of once a quarter to meet with the doctor, because in order for him to give virtual advice, you have to see him in person.
Okay.
But my son's a junior in high school, so he came to tour Duke, and he went with a senior from the engineering school. And I haven't done a lot of tours, but she said something that I just thought I loved, which was, she said the number one thing she learned at Duke Engineering and Duke was she learned to fail and accept failing, and that in high school and the rest of her life, it always came easy and she was able to get grades. And then she got to Duke and she's doing things where she would get a 30 on a test and she would try to do research and just be wrong. And that's been the most empowering thing that she's ever experienced. What do you think about that?
I actually love that, because I think it's an issue that every kid has. Like, you go through life, with all your friends, and you go through high school and you realize, the people you hang out with, you're kind of the average of everybody you hang out with, and you're all about the same. And you think, you know what? You get I'm the baddest bitch in the club type of, approach. Like, you think you're the smartest person. And then you go to a place like Duke I did this too when I went away to school. I thought I was the smartest person in my high school. Next thing you know, I go to school, I'm like, damn, am I stupid? And I think that happens to every kid when they're a freshman, and especially if they go to a good school or a sophomore, whatever, they realize, you know what? There's a lot of smart kids out there. There's a lot of really smart people. It's happened to me in the business world, because every time we build, companies up and they have, 300, 400, 500 employees. The last two companies have had, 500 employees and 350 employees respectively. And when we've done that, like you just start to realize, oh my God, everybody is so smart. Like, everybody's smart. And it's just, I think that is one of the keys to maturing. That's one of the reasons you go away to a university, is because you need that. You need to mature that way. And I don't think you can recognize that or actually realize it until you experience it in person. It's the most critical piece of growth.
I thought it was impressive that early on, she struck a chord with me with that, and it really resonated. And I was like, yeah, I totally agree with that. And it's like deeper than you even think. Is there a time that you could recall where you kind of failed miserably, not at a trade, but like something as you were developing, where you guys were all in and gung ho on something and it just didn't work out, and the pivot ended up being more meaningful than the failure?
I would. Now, you remember, I did a whole tour called the Bad Trader Tour for an entire year, just talking about all the horrible investments and trades that I've made throughout my lifetime. So I'm pretty open about this, but I don't think that I don't think we've ever even built a business where what we thought we were building is what we actually ended up building. And I think that really happens to everybody, and I don't think that would be unique at all. I mean, I think that in life you have to pivot very quickly. You just can't be stubborn. Our ability as business people, as entrepreneurs, as traders, whatever it is, the ones who have the ability to pivot when necessary, those are the most successful people. And in business, I think it's the same thing. I mean, you can go back and you can look at Microsoft, you can look at Apple under Steve Jobs, you can look at all of these incredible companies. You can look at Amazon under Bezos. I mean, look at how these companies started and look what they end up with. Look at Meta under Zuckerberg, just what these companies have become from where they started. NVIDIA is the same thing. I mean, it's a $5 trillion company. Look where they started. They were a joke.
Video games, right?
Yeah, but I mean, like the worst of the worst.
Yeah.
So I think that, and not those are just the crazy outlier stories, but even on almost every level, one's ability to pivot, really, that's how you define yourself, on your ability to recognize things that work and don't work.
Yeah. And keep moving forward.
Yeah.
So Snow got back to me. It was your favorite strategy, and Zahor kind of followed up with that, saying like, I'll combine the questions. One is your favorite strategy, but let's say like we all agree on this call that we're on the top end of the range for the year on the market. We're not calling a top, we're not doing anything, but we're saying we don't feel great up here. What's a good kind of options trade you could do to reduce risk that's somewhat conservative?
Well, if you're long stocks,
and I could put it on the screen if you want to, like if it was like.
Well, no, you don't have to. I mean, if you're long stocks, you can obviously sell calls against it. I mean, that will reduce your risk by 30 to 50%, 30 to 40%, let's say. So that's the first thing. That just takes a little delta off the table. I'm not a hedger, so I don't believe in hedging, but I do believe in taking some money off the table. And if you don't want to sell the stock for tax reasons or whatever else, and you have some decent profits and you want to try to push everything to next year, sell some calls against the position and don't worry about it. Don't even think twice. I think if you're overall bearish, I like the indexes here. Like I wouldn't buy volatility necessarily, but I would probably get short. You don't have to get crazy short, but get short some of the indexes. For me personally, I'm already short some of the indexes, so I just sold some individual equities today. Like I used today as an opportunity to get a little bit short in AMD because it was up, like whatever it was, $18 or $19 today. And I used that as an opportunity to get short AMD right here. Not like, not any lower, not any higher. I scratched the day in there, but I had no position on coming in today, and I just got short AMD. I don't know if it's going to work, but it's a stock I wanted to get short anyway, so now I'm short it.
So but now, when you say get short, what you mean is you're selling a call?
I sold calls. I sold a little bit of stock, and I sold some call spreads. I did like we call that, there's a name for that strategy. It's called the stupid. It's short stock, short call spreads is literally called the stupid. Okay. And so that is not my favorite strategy, by the way, but that is what I did today. And I was not under duress. So that was a very conscious decision. I mean, normally, sometimes I like selling call spreads, and more than that, I like selling strangles. I will skew my strangles, but I do like to sell strangles. If I break down all my positions now, and I have a lot of positions on, I would say around 50% or so are short strangles.
So now, are those going out to like December 19th?
Yes, I have rolled out of November.
December 19th. And then are you still around the 30 delta?
It depends. Some I'm wider. Some I'm at like the 16, 20, and 25 delta. It really depends on the amount of adjustments I have to make. So if I haven't made any adjustments, I'll be around the 20, 22 delta. If I've made adjustments, I could be tighter.
So then are you buying the 300 call?
What do you mean? In where? In
In
AMD?
AMD, yeah.
No.
No, were you selling it?
I mean, my primary position there, I can tell you right now, is short stock and short 300s.
Short the three.
I'm short the D's 300s.
But
and
for the strangle, what would you be doing?
I'm short the 300s, and I don't have any short puts in there right now, but I'm short the 300s. If I did, I would sell some call about equidistant away.
Well, you'd sell the 300 call or no? Sorry.
No, I'm sorry. Some put equidistant away. I apologize. Like the 200 puts, I'd probably sell something like that. 200, 210, something like that.
230 is like 22 delta. So it's trading at 260s. That's like 40 points away.
Yeah.
So you'd sell the call. You would sell the call. Yeah. And then if people wanted to not do that with the naked exposure, because most people probably can't.
You can just spread it off and just buy an out of the money call. Buy the 320 calls, the 200, 210 puts. That's it.
So let's look at that for a second. Because I think Tom would sell the 300, buy the 230, sell the 230, sell both. And you're collecting a credit of around $12.
No, I would probably sell a slightly smaller put, maybe the 220s. Okay. I'd want to be about equidistant away. Yeah, right there. That'd be my short. Yeah.
So you right. So what I found in speaking to most people is they don't like that little infinite loss. That's just too scary to have on there for most people. And I agree with that. It doesn't scare you. It scares me.
Okay.
And also the buying power, that's not terrible for one contract there. You're collecting around $10, and there's a very nice probability of profit. So what's going to happen is when we buy the 320 for protection, and we buy the 200 for protection,
yeah,
that profit gets cut in half.
Yeah,
the probability profit gets cut in half. But now that infinity number changes to 1,500.
Yep.
To 500. But I don't look at it. Tell me if I'm right or wrong in this. Like when you have that trade set up, I don't look at it as I'm risking 3 to make 1.
No.
I look at it as I'm putting up $1,500, and there's a high probability I'm going to make 30% on my money over the next month.
Yes, I look at it the exact same way. I never look at that. I never look at any trade at max loss. I just don't do it.
Right. That's your risk and what you could make on your money, and the chances are that you will.
Yeah, I mean, exactly. And I think for most people, here, do me a favor, take off the 2 buys for a second. Let's show a little trick here.
Okay.
Take off, just right click on the green line.
Yeah. Sorry, I'll do it up here.
Right click on the green line. Right click on the green line. Now, because you just talked about risk. You talked about, undefined risk and all this kind of stuff. The real risk in this trade, as viewed by the brokerage firm and the regulators, this is not like me saying to Adam, what do you think it is? The actual real risk in this trade is the buying power reduction. So you can see it. You see it on the right-hand side on the bottom line. I can't read. It looks like it's $2,500. You see right there?
25.88.56. Yeah.
Okay. So that is, as a brokerage firm, that's what we would look at as the risks that we're taking, above and beyond. How much money does the customer have? All that kind of stuff. It's all built into the equation. But that's the real risk in this trade. The real risk in this trade is not some infinite number, even though theoretically it is. The real risk in any trade is the buying power reduction, because no firm is going to take all your risk to make 50 cents on a contract. Okay. It's a stupid business model if we did. So the real reason that firms do it is because that's the real risk on the trade is $2,500. And you obviously have more than $2,500 in your account. So therefore we're okay with you doing that trade. And that's the way you have to look at this. You can't look at it as undefined risk as having this crazy outlier number. That is the back of the envelope way to do it. Also, on this platform, we have CVAR, which is conditional value at risk, which you could add to that line at the bottom, or that same line where you have all your Greeks. You can add CVAR to that. And if you do that, okay, conditional value at risk will show you a number very similar to your buying power reduction, but it will show you actually what your risk is in the worst 5% of all cases. Tasty is one of the only platforms that embedded CVAR into that line.
I just added it.
Okay, so
here's my CVAR.
What does it say?
7,586.
Okay, so in the worst 5% of all cases, and this goes back, it runs a crap load of I think it's a few thousand, tests. It's essentially, a Monte Carlo simulation that just runs a gazillion tests. That's your other real number. Like if you want the outlier number, you want to see hey, this is what happens, worst case. But hold on, how many contracts do you have in there? One?
Yeah.
Okay. So the brokerage firm looks at it as $2,500 in risk. Is this portfolio margin?
Yes.
Okay, so it's okay. Let me take that back for a second. I didn't realize this account's portfolio margin. So in a portfolio margin account, it's a little bit different because this is looking at all of Adam's other positions. So let me apologize. I didn't. This is your account, and I wasn't sure if your portfolio margin. So this looks at all your positions. So these numbers are looking at something else. But for everybody that's listening today, add CVAR to that line, just like Adam did. And when you do a naked trade, any kind of short call or short put, look at your buying power reduction, because that's the way we look at your risk, brokerage firms do, and look at your CVAR, because that's a calculation that's built into this platform. And I believe this is the only platform that offers a CVAR calculation. Now, Adams is different because when you have portfolio margin, the margining system does not look at this individual trade. It looks at all the positions Adam has on, and then it margins this individual trade. So it's totally different than anybody else.
By the way,
anybody can have portfolio margin, but it requires $175,000 in capital. Minimum.
By the way, we could have a whole conversation about margin and the way it's changing, because I believe now you don't need 25,000 minimum to make day trades. That's changing.
That is changing, but it hasn't changed yet. The expectation is that it'll be sometime in fourth quarter of this year. Scott and JJ were fighting for that for the last 10, 12 years. They finally made it happen.
Advocate for everybody. I still remember, whenever I think margin, I still remember it was 1999. It was a Friday, and I was getting killed. And this is how margin worked for me in 1999. They called me into the office and they're like, you don't have any money in your account and you have $1 million worth of stock. I think we might have to sell some unless you put money in. And I said, how much do you need? And they're like, 25,000. And I was like, okay. And I had to borrow. This is 1999. I had to borrow 25,000, but I'm like, this is good. I'm going to pay you back next week. I feel good about these positions. And I did. I paid the first back. But I had $1 million in buying power with no money in my account. And they didn't sell anything. They just were like, it was so different, which allowed me to, it was just a different time. But that's what I think of whenever I think of margin. By the way, someone asked Quentin, who do you recommend for trading options? Kelly, definitely Tasty. I mean, that's it's truly the best version of anything. And that's what Quentin said. And I said, when Tom built Tasty, it was literally like, I always use the analogy. I like the Il Molino analogy. The brothers from Il Molino had their restaurant, which was, in this case, in my mind, Thinkorswim. They built it up. They franchised it, and they said, now we're going to do something really special. And they built Il Gabbiano in Miami, where all three of them go there, and they're like, now we're just going to do this, which is the best shrimp fry Diablo anywhere. So like Tasty for me is
Il Gabbiano is the guys from Il Molino.
The guys from Il Molino sold it, and then they opened Gabbiano in Miami it's on the water.
I've
And
been there. I've been there. I've had dinner. My wife and I went there. I didn't know it was the same people.
what'd you think?
We sat outside. There was fireworks that night on the water, and I thought it was awesome.
Yeah. So that's like it's you achieved everything you wanted to do. What are you going to do next? I'm going to do it better. That's what this was. And so, yeah, that's your answer. That's your answer. B said, Tom, when can you talk about? We'll do that the next time. How you started Tasty Trade and software was. You got to save some time. Kelly said, thanks. I was last minute told about this meeting, so I didn't realize where and what I was watching. Haha. Well, yeah. Quentin sent you the link, Kelly, so you're good there. Autumn said, I'm looking to take my trading skills to a new level. Okay, yeah. So Tasty has a lot of options content if you want just pure options content. This is more of a free-flowing conversation where we cover strategy and everything else. Yeah. But I will, with a couple minutes ago, Tom, I know you like sometimes controversial questions, and you're a math guy. So I actually have one because I don't have an – yeah, I know it wasn't a complaint, Susan. Your energy is great. Appreciate you. Not a complaint. Why can't we initiate positions for some stocks that will say sell to close on? Oh, that's usually if there's like a float issue or liquidity issues or something like that. You could call them.
It could be a fraud issue too. Sometimes very inexpensive stocks are very illiquid stocks, and they're usually penny stocks, or they usually don't trade that much. They are subject to a lot of fraud. And so what we do is the brokerage firms will set them to closing only, and you're still allowed to trade them. You just have to send an email or call the trade desk, and they'll open them up for you once they know you're real. They're worried about fraudsters, and there's no recourse. So that's all it is.
Tom, this question will be with the opportunity to punt it till next time if you don't want to answer.
All right.
It is controversial.
I have nothing's off limits, so I don't care. No, whatever.
This is about tariffs.
About tariffs.
Okay. The math on tariffs, because I hear two different versions. One is this is how much money we've brought in from tariffs. Okay. And the other is, but we're the ones paying for that. Yeah. Do you have an opinion on tariffs?
Of course I have an opinion. I am very political. I have an opinion. And I mean, first of all, I will preface this by saying tariffs are the dumbest economic policy we've ever implemented in this country, probably in the history of this country. But who pays for the tariffs? You pay for the tariffs. Individuals pay for the tariffs. It's a tax on American consumers. That's all it is. I don't even know how this is a question. I don't know why anybody can't answer this. Tariffs are paid for by the American consumer. How else could you possibly look at it? Prices are higher. American consumer pays for taxes. That's the whole concept of the latest proposal to give, a lot of people at a certain income level back $2,000 because it's almost like a rebate. But, the reality of economic policy is you don't want rebates. You just want lower prices, and you want a fairer market. And the problem with tariffs is they're an isolationist economic policy, and we need to have free markets. This country's built around free markets. Our pricings are built around free markets. And as an economy, we thrive on free markets, not on protected markets, and not on markets that are regulated or legislated.
Okay, no, that makes complete sense. And yeah, I'd much rather pay less for something than get the credit card points back. Because
who wants to pay more and hope you get a crappy rebate that's universal later on? I mean, it's an unfair tax on consumers. It's especially an unfair tax on those who make less money. And so it's not a fair economic policy. It's not a good economic policy.
But then Joseph says, but what about other countries? So when other countries charge tariffs, they're making things more expensive for their own citizens?
When other countries can do what, each country, it's very different. It's not like everything's not exactly equal. And remember, America is a very different place than quote other countries. We have a pool of liquidity here that makes things a lot less expensive to innovate and create. And other countries, all they really have is cheap labor, but they don't have the capital. So if other countries implement tariffs, it's simply to level the playing field. You don't need to level the playing field when you own the playing field. Wow. We are the playing field. There is no other playing field. The idea that this is somehow, making it more fair for us is ridiculous. We are the only place where you can play.
This is, by the way, I shouldn't have waited till the last couple of minutes, but I knew this was just more fun the question. There's a lot of questions coming in now, like good, bad. We could have gone on for another hour for just this stuff. I'm just saying.
Well, I love controversial stuff, so I would never back away from it. But I mean, this is a conversation you can have for hours. We've done multiple podcasts on this. I mean, been very outspoken about it. It is something that, love to cover more. I'm not sure that it has any kind of an impact on the concentration of stocks at the top of the funnel, because I just don't think it has, based on the fact that we have $4 and $5 trillion companies out there. I don't think it's had a major impact, on companies that are too big to fail, for sure. It might have had a big impact on companies that are on the other end of the spectrum, from the Chipotles of the world to the Nikes and that kind of stuff. But I don't think it's had the same impact, on the NVIDIAs and things like that. So I don't think that it's had a huge impact on the stock market. But I mean, I think it is an interesting topic to talk about. And there is two sides to it. I get that.
That could be fun. And I appreciate it, because it's like you hear both sides, and really it's, yeah. Quentin said there's a promotion going on right now, 30 days commission-free trading. 30 days commission-free trading. So Zahor, there you go for that. Quinn, if I open another account, can I have that?
No.
I'm just kidding. All right. What I could do, that would get me back. I could have used that on Friday when I made 200 trades. We'll talk, okay? Yeah. By the way, I think the most unnoticed thing about the Tasty platform, by the way, the most overlooked for me that made it really addicting, was the sounds. Like adding a sound to my trade, and I made it a cash register, and hearing the register going off every time I'm trading was like, I just love it. Like, I enjoy it too much.
So I'll tell you a funny story. When we're building Tasty, the devs were like, they have their own like nerdy sounds and all this kind of stuff. And the first thing that they forgot when we built Tasty was they forgot to put in the opening bell and the closing bell. And so I went to them and go, hey, what the hell, man? I love to hear, I got to start my day with the opening bell, and I got to finish my day with the closing bell. That is how I run my life. Until when the opening bell goes off, I know it's time. When the closing bell goes off, I know I'm kind of done. They go, nobody else likes that bell time. It gets people in trouble when they're at work and all this stuff. I go, I don't give a rat's ass what you think. I don't even want to let people turn it off. Just put the damn bell back in the platform. And then after they were like, all right, fine. And then after I got the bell in there, I'm like, we want a ding. I want to hear a ding every time there's a trade, because I need to know. And they're like, well, nobody else wants it. It's annoying. It bothers people at work. I go, listen, I don't care. Okay. We want, every one of us, we're all traders. We all want to hear a ding. And that
I've been in meetings, usually for the closing bell, where in the middle of like a meeting, you just hear zing, and everyone jumps up. I'm like, sorry. And it's my phone going.
But you know damn well you love that. You love that.
I love the opening bell too. It's like the start of the game. It's like a gun going off in a race. You need that. Right. Yes. I am also synchronized around those events. The only other thing I would think maybe is if they could have had music on your P&L, where you could set it so that if it's going down, it's more like doomsday music, like dun, 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 dun. And then if it's going up, it would be like Taylor Swift. and like, so, like based on the music, how you're doing for the day, it would elevate your mood. It's an AI thing for the future.
Well, there was configurable, sounds and stuff, but and there still is, but that was, yeah, I understand it. Some people have requested that over the years for sure.
M says, I'm like you. I like the bell both times and ding for trade executions. Someday I may become as smart as you. You're probably smarter than me right now. Definitely in some ways. Steve said, ding, my foot. I get the cha-ching when I buy and sell, laugh out loud. Yeah. The sounds are like so underrated in terms of like psychological feeling. Tom, this was great. We always appreciate you. I know we're a little macro on this one, but that's kind of where I'm at. So thank you for rolling with me on that. I can't wrap my head around the micro decisions when I get stuck on how I feel overall, and I'm kind of like stuck overall. So thanks for talking that through with me. Yeah. I think you look great without the braid. I think the hair looks great.
I much prefer it. I'm living free right now.
Yeah. Well, we'll be back soon. Quentin, thank you for answering everybody's questions. They came in throughout the entire time, which was fun. And we'll be back next month. And Tom, always really appreciate you. Thank you.
Thanks, Adam. Talk to you soon, man.
Bye.
All right. Bye, everybody.